Let's talk about opportunities in the S&P, shall we? And where I was active today, and what I was looking for, and how that was playing. Okay, so yesterday, it all starts with yesterday, leading into today. Yesterday, very pronounced point of control at 39.60 or 37.68. I'm sorry, and what appeared to be an imbalanced profile to the upside. We kind of had two distributions. Actually, kind of going back here, but two distributions and an incomplete profile. As long as we were above 37.68, looking for 3,800. Opened in the reopen and then into Asia, and we traded straight from that price, which again, this is the FOMC range from last week. Overnight, went through our pre-IB bias. So remember, we had a gap. So as long as we held the gap, then we would stay with the narrative. Instead, we traded all the way down to this area. Now, that 3,700 is not a high volume area, although we spent quite a bit of time there. And then actually took out the initial balance low of Europe before the U.S. Open. Okay, so that means that we're starting the U.S. Open here. And so, what's the opportunity? So that's a gap. Okay, so we open with a gap. Gap rules are in place. So what's a gap rule? So the gap rule says that if we have a wider than 50% of the expected range or more, there's about a 50% chance that it will close. If we have 25% or so of the expected range, there's about a 60% chance that we'll close the gap. All right. So this was what we call a tier one gap. So after all the movement overnight, this is a tier one gap, and very much an open test into that Euro IB and above that IB high of Europe and above the opening range high, and they're gunning in A period for the gap close. Okay. Now, once they get inside of the prior day range, so an auction that's able to accept inside of the prior range, the probability that we will then go on to test that prior point of control is greater than 65%. So at that point, as long as this excess holds and we hold inside the range, you got a directional open go with that was kind of a combo directional open go with / prior value test. So directional go with is looking off of impulsive activity in the IB. A prior value test looks to target a prior value reference, which that becomes, so it's kind of a combo. It's like that helps us like hold the directional open go with because we know where we're going to. Okay, so that's target one, and that's basically trade one and done at that point. Second trade, okay, we get up here, we take out IB high, and then the value is migrated all the way. So the VPOC's up there. At that point, it's one time framing. So we could trend higher, right? We've got 3,800. We got last week's highs. We kind of have to wait and see what happens. D period lower. Okay. Inside the initial balance. That's interesting. We've got singles down here. And then E period actually trades above and engulfs back below, still having value here. But this presents an opportunity for an IB go with long. Okay, so ways that we can do an IB go with. We can go IB go with at the extreme. Well, we wouldn't do that because why? We've exhausted the expected range and we had a wider than average IB. We were 2 times the IB as average. So that means if we want to go with it, we need to pull back and we need to get in a favorable position to developing value. When you're down here, towards developing value area low, we're basically in a low volume area here, but you're down here, you've got a good little bit of divergence to developing value, which is higher. The profile is still skewed. We're talking about skew. So there's still skew there. This is an opportunity in this first pullback to get long for the IB go with. So, you're long in this area. There's buyers that stepped in here right back above that prior VPOC from yesterday. And then you're looking for, target 1 back to developing value. Target 2 would get, back up above IB. But, I really just kind of took it to that, and there we go. Then I had some guys asking about, hey, should we do an extension fade? Okay, so, some of the reasons to do a fade are what? I have price to value divergence. So when that question was being asked, we were right here. Okay, we were basically at value. So that negates an extension fade unless we can get divergent. Okay. And I even commented in Slack, I said, hey, we would not short right there at value because we can get squeezed. Do you see what happened here? Do you see this? That's a squeeze, right? Some over aggressive shorts, pop. And the velocity, and that they came back in that same period, they absolutely squeezed somebody and made him puke. Okay. So, however, once we pushed up here and came back in this direction, back below the C period high, we're kind of retrading some ranges, and we already have a rotational day. We've got some impulsive sellers stepping in. That's an opportunity to be short an extension fade, targeting to the VPOC as target 1, and then target 2 would be to rotate down below it. Okay, so that is the extension fade. So directional open go with, IB go with, extension fade, right? We don't take an extension fade till we have divergence and we know that the auction has been shut off. We traded up into an area where we got rid of a little bit of that imbalance and then traded back to value, and they were even able to press it back to the VWAP by the close. Okay. This actually would have been a good spot for another IB go with long, leaning on the buying excess, but it came too late in the session. So no trade. Okay. Hope that helps kind of walking through those opportunities and where those were as the day progressed. And, like I keep saying, focus on this dude, right? These are 30 minutes, and sometimes that's even too micro. Pay attention and learn to read this structure here. Look at that bell curve. Look at where it's filled in, where there's holes in it. You will see opportunity. You will see opportunity. You will predict where price is likely to go if it's unable to be in one place or another. All right. Hope that helps.